Get started. Hope my Instagram works today. Seems to have a mind of its own. Okay, I think I'm good. So good evening, everyone. This is Crypto Pulse Weekly with Dr. Demi, and as usual, we'll be going through the events of the week and an analysis of what's happening on the markets, with a view to giving you an understanding of where the market is going and our opinions based on research or what the likely causative factors are for some of the market movements. So as usual, we'll start with market updates, then we go on to the crypto vital signs, which are the fundamental and technical analysis of the market. Then we go on to the crypto drip, which is a knowledge sharing session, and then we'll take questions and answers. Hopefully, we'll make time today and finish ahead of schedule. So let's get started. Last week, there was blood on the streets, and a lot of people were very worried as to why the price of Bitcoin was literally on the floor relative to the previous week, after just hitting an all-time high of about 65,000. And I had a lot of calls, I had a lot of messages, and I think I took an exceptionally long time on the last week's call explaining to people that it's a healthy behavior for the market to move in ebb and flows, meaning there is no market that just goes up and never takes a break. If you find any market or any asset like that, it's a completely unhealthy asset and it's likely to crash. We all know about the law of gravity. Incidentally, the law of gravity applies as well to the market. So there's a general saying that the market goes up by stairs or using the staircase and comes down with the elevator, meaning when it's coming down faster and crashing. So that's exactly what happened last week. There were a number of notions as to why it happened, all sorts of permutations and extrapolations on what the possible reasons were. I'll touch on a number of those today, but it's important to know that the market has since recovered, like I promised last week, that the market will always recover, and that kind of fall was actually a good opportunity to buy. And the market did fall to 47.9 or 48,000. If anybody bought at that time, they're almost 10,000 in profit because the market had touched 57,000 today in the last 2 hours. And we've also see a very brisk movement in Bitcoin dominance. So we'll look at Bitcoin dominance on the chart today, and we'll talk about the technical analysis of the Bitcoin USD pair. So it's important to keep that in mind that we just witnessed one of the usual corrections. And if you watch last week's video, I did take time out in the crypto drip to show you the regular corrections we had in the last bull run. We had almost about 8 or 9 of them. And in this bull run, in fact, we've really just had like 2 major ones, the one in January and the one we had last week. And the one in March and April were not really as steep. But when you have a correction that's 20% or more, it's in a bull run, it's usually an indication that the market is getting support to go higher. So it's like a ram that is in a fight and takes some backward step to gain momentum. So those backward steps that the market takes to gain momentum usually pushes the price higher, and that's what we've seen in the last 1 week. Now, I'm not saying that you're going to get to 65K next week or you're going to get to 70K next week. But what I'm saying is, by the market taking that 26 or 28% correction, it has given more room for the market to shoot higher up. And I will explain that during the technical analysis a bit today. So yeah, we're in good stead. Very good. But if you didn't buy Bitcoin last week and had plans to buy, this week is actually a very good time to buy as well, because the market is not likely to sit below 50,000 anytime soon. And I mean anytime soon. And if anything, if it doesn't go up, it will probably go sideways for the next 3-4 weeks, after which it might shoot up exponentially as well. So it is a good time to buy Bitcoin. It's a fantastic time to buy altcoins. So that's that in terms of volatility and overview. In terms of regulation, I've seen news of FBI interfering with a guy that has a Bitcoin money laundering website called Romanov something. It's a Russian guy. I think he operates from US and somewhere else. And basically, I think it's called Fog Crypto or something like that. It's a website that helps people to launder money. And Bitcoin, apparently, they've nabbed about $350 million worth of Bitcoin, and they've arrested him. So when people go about saying that, just as a side note, when people go about saying that Bitcoin is used for nefarious activities, in statistical terms, the fraction of nefarious activities that happen in Bitcoin is like 1 to 1,000 of that happens with US dollars. And I'll explain why. All transactions that are happening on this blockchain is available for everybody. I mean, everybody all over the world. And with advanced analytics and artificial intelligence, you are to create all sorts of models from data that you get on the blockchain. But there are tons of companies that their whole business model is built around analyzing blockchain data. So when you have that kind of open source, quote unquote, information, it's very difficult to use that for nefarious activities. So it's a very faulty argument to say that things like Bitcoin are being used for nefarious activity when drug money is primarily carried out in cash. All sorts of vices in this world are usually carried out in cash. So the statistical ratio it's not commensurate with the noise that is being made around, money laundering and the likes. There was also this news in the new about the German Securities Commission raising eyebrows about what Binance is doing, selling what we call stock tokens. So stock tokens are like digital representative of real life stocks. In the truest form of it, they are like digital derivatives because they are just digital tokens. They're not the actual stock. The digital tokens attract the price of the actual stock. And if you buy them, they carry the same value as the actual stock. What I'm not sure of is the underpinning of those digital tokens to the actual stock. I know that the exchanges do claim that they do one-for-one purchase and all that, but nobody has audited that. So I can't validate that. For instance, if Binance is selling TSLA, the same price as you are getting Tesla stock shares on the New York Stock Exchange or through Robinhood, that they're actually making that direct purchase and doing settlements like you would do in the real stock market. So I think it's not only the German SEC that's going to come up with issues of this. I think other countries will start raising issues with these digital stock tokens in the near term. In terms of sentiment, I think the sentiment is still overall bullish. It's interesting that it's neutral right now, but I understand that there might be mixed feelings, especially for newbies or people who are just investing in crypto, who are sort of afraid. For the older guys or the OGs, they're sort of like, okay, well, Bitcoin is not moving forward soon, so let's go into altcoins. Most of them are already divested into altcoins. So it's understandable that the sentiment is neutral as we speak. But what I can tell you is that the altcoins season is still in play. Even though the movement has been spasmodic, I think we're still gearing up for a very fantastic altcoin season, especially in the month of May. To explain what happened the last time, I'll use this chart from Sentiment, which is an online, on the chain analytics company like Glassnode. And what they showed was that just before, which was when the price hit 65K last week, a single wallet moved 2,700 Bitcoins to the exchange. That's about 157 million USD for context. You can't move that kind of money in the bank. In fact, in any bank, you'll have to take days or weeks to successfully move that kind of money. They will go through all sorts of clearing process to get that kind of money moved in any financial institution in any country in the world. And this was done in 30 minutes. So the guy moved 2,700, the guy or the group of guys, I don't know who the owner of the wallet is, but it's a Wave wallet, meaning it has thousands of Bitcoins. And he moved 2,700 Bitcoins to the exchange. And you can see that so this line here, this faint line going downwards, is a representative of exchange outflow and inflow of Bitcoin. It's been going down for almost 2 years, as you can see here. And all of a sudden, you see this outflow go up all the way here. The green one is the Bitcoin price. And what it meant was that he sold the Bitcoins at market price. If you've taken any of our trading classes, you understand placing limit orders and placing market orders. When you have a huge order, that's a market order, it's definitely bound to drop the price, because what it means is that it's going to consume everything you have on the order book. So if it sells to everybody at current price and there are no higher prices or higher bidders, the order starts to execute on lower prices, which begins to crash the price, essentially, or lower orders, which begins to crash the price. So that was the beginning of I think that was the real beginning of the correction we had last week. And of course, when that starts to happen, it had a snowball effect. Every single time, it had a snowball effect. And to date, I understand that's the biggest single on-chain transaction on the Bitcoin network this year. And this guy is the same guy that sold off last year, apparently, was one of the first people that sold off when the stock market crashed during the beginning of COVID last year. So I'm going to do more research on this particular wallet, because I'll be trying to track what's happening on the wallet myself to know when we're likely to see this kind of sell-off trigger. But basically, it's basically just a way of taking profits. So what it meant was the guy has probably accumulated for the last 1 year or the last 6 months, and it just looks like, okay, maybe he accumulated at 4K or 5K, now it's 65K. I mean, I will take profits if I were him. So he decides to take profit at a huge, taking profit on 57 million USD. He's probably made more than, he's made like 12x on his initial investments. If he accumulated them last year, assuming that he accumulated the one he's selling off last year, he's made 12x on Bitcoin alone. So yeah, fair sentiment and fair play to the guy that made such a sharp move. So naturally, when you see an all-time high, you should expect that there's going to be a sort of correction very soon in the bull market. And all-time high historically for Bitcoin has been the trigger for a bear market as well. So if the market blows off at the top, let's say 400 or 500K, if the market gets to 500K, there will be major sell-off. I can tell you that. Major sell-off to almost 50% or more, because at 500K, even I will sell my Bitcoins and just bank it for like a few days. I'll wait for the market to crash. Naturally, because if the market gets to a newer region, it means everybody that's ever bought Bitcoin is in profit. So somebody has to sell. So that's the underlying factor for what happened last week. Now, there might be triggers, fundamental triggers that everybody had alluded to, but this is what happened on chain. Just thought it was important to explain that. And I just brought this back. This was from last week when somebody was making a joke on the Lord's Prayer using Bitcoin terminology. And another guy was saying that while the guys with 1 million plus keep buying the dip no matter what, that the guys with 100K to 1 million are setting lower highs and lower lows on their other flow. You need to understand trading to understand what that guy is saying, meaning they are selling off at a loss because the market is crashing. When the market is crashing and you're in a bull market, it's not the time to sell, it's the time to buy. And I think I mentioned it also here on the call before, that the people who produce the charts set it at a default that sends the wrong message to your subconscious. What do I mean? If you've ever seen any asset chart, you will always notice that the down candle on any asset chart is red and the up candle on any asset chart is green. What it's telling your subconscious is that when the price is going up, it's the time to buy. If the price is coming down, you should get out. That's exactly the message that your brain is subconsciously getting. Now, if you don't know that and you come into the market, every time the market crashes, you're always going to sell at a loss, which is what happens to many people who get into new asset classes, and then the market gets shaky and then they panic. That's the whole idea. The whole idea is to get to panic and drop your holdings, and then the bigger boys they buy it cheaper. It's like not a proverbial. It happened to me growing up as a child. I had older uncles that when I had snacks, they will woo me collecting my snack, and Jack, let me just taste your snack, and I'll give them to taste, and they'll eat the whole thing, and then I'll end up crying. But I ended up repeating the error over and over and over again because I never figured out that that was what they were trying to do. So in the same way, newbies in the market will always sell at a loss, thinking that they don't want to be in a loss position. Let me use that word. And then the sharper whales and the bigger boys or the older guys are waiting in line to collect their bitcoins in this case. So yeah, we bounced back from last week's dip, and as I said last week, the RSI, which is a relative strength indicator, was oversold, which means the market was in a buy region, a very strong buy region, and that's been confirmed by the $10,000 gain that we've had in the last 1 week. Now, if you look at on-chain metrics suggest that we actually still have a long way to go. People are projecting 400K. Our projection on this channel is 360,000. At 360,000, I think I'll take a lot of profit, definitely. But if it gets to 400K, I'll be part of the trade, but not in any heavy position because it might just be very close to a blow off top. But I think we have a chance of getting to 500K, not getting there and staying there, but just, just touching the tip and then dunking down completely. So what we've seen last week is obviously a look at top, meaning the next leg up is probably going to be around 70K. I will show you that when we get to the charts. I just saw this, I think yesterday when Visa were trying to increase some of their holdings in crypto. I think they're going to try to produce, I think that's what's actually happening. They're going to try to produce credit cards that incentivize spending by rewarding you with Bitcoin. So you'll get Satoshis. Satoshis are the smallest unit of the Bitcoin. You get Satoshis for every purchase you make. I think that's going to be the in thing for 2022. And that's because some card companies have already started that initiative of incentivizing people with crypto. Of course, people like Crypto.com already do that by incentivizing you with CRO, but I think some are going further and starting with Satoshis. So people can get to Satoshis for spending their credit card, automatically you've created an incentive for people to want to use the product. So I think this is going to drive demand on a totally different scale. This guy are the monetary gatekeepers in the retail industry, to be honest. So I think this is a new level of demand that we are yet to see. In another news, we have our dear country coming in the limelight for hitting 1.5 billion on peer-to-peer transaction on Paxful. I remember when someone brought this up on the WhatsApp channel, and I was saying that that's not even taking into account what's happening on places like Binance. I don't know the market size of the P2P on Binance, but what I'm sure of is Binance is probably rivaling this, if not more, at the current rates, because I see the orders. Let me use that word. So I go to P2P on Binance very, very well. And when you type in NG and USDT, you see the orders. And I'm like, there is no way these orders are not more than that. I don't know Paxful. I don't use it at all. So I don't know what the volume is like on that platform. But on the Binance platform, I can attest to that. I think that will probably be double this figure that is being reported by Paxful. Uh, and that gives an idea of what's happening with adoption and crypto in Nigeria, in spite of the stupidity of the government. There's another news that actually didn't carry, but I saw from one of the people that forwarded to the WhatsApp group, which was about South Korea, saying that many of the youth in South Korea were dropping out of jobs to pursue investments in crypto. And I said, well, I mean, you can't blame them if you have a shortcut to arrive at a solution, and you're sure or you have a guarantee that that shortcut is going to take you there, you're likely to take that shortcut. It's just a natural human tendency. So thumbs up to Nigeria for showing up in this regard. I mean, I know we're usually very aggressive people when it comes to things like this, so I'm not surprised. So interesting to know that this is what's happening. Like I said, I think that was that last year or this year? I think this year when that issue of the ban came, that we're likely to have cryptocurrency overrun the currency of the country very, very soon. Like people will just say, you know what, pay me crypto. I don't want your naira. I think it's gonna happen very faster than you guys think, because from everything I can see, I think there's hyperinflation, and I don't think the government is making any money. Anyways, let's move on from Nigeria. Stay on our crypto lane. Um, from what happened last week, despite the fact that one whale decided to sell a lot of Bitcoin all of a sudden, top whales are still adding to their Bitcoin wallets. And right now, we're at an all-time high of Bitcoin wallets with a Bitcoin wallet and whale wallets, meaning amount of people, we call people who have more than 1,000 in their blockchain wallets whales. I've shown that classification before about how you classify people based on their ownership of Bitcoin. I think the largest is the Blue Sea whale. I think that's about 5,000 or more in Bitcoins. But the amount of people who have 1,000 Bitcoins in their wallet is now about 14% of the circulating supply, and that's the highest since November. Two things that this tells me. It tells me that we are going to very soon witness a spike in price, because November was when the price started climbing. Because when you have this kind of accumulation from the whales, what then happens is there is less availability of coins on the exchanges to sell. And it's simply a demand and supply situation. If on the spot market, there is no coin to sell, the available ones are going to go to their highest bidder. And if there's a sharp shortage, then you're going to have a spike. When you do have a spike and you see that kind of sharp shortage, then you can see the prices go parabolic to like 50 or 100% all of a sudden, and everybody's like, oh, this doesn't make sense. But if you have been following the on-chain story and see that we've actually been having a consistent drop in amount of Bitcoin being supplied to the blockchain for the last 2 years, it immediately makes sense that this kind of whale accumulation will usually precede a spike. And when you do have that spike, so what happens is, just to put it in context, when you have that spike where you don't have enough Bitcoin on the exchanges and the price has suddenly gone up very high, then one of the whales is going to decide that, you know what, let me take some profits off the table. Then they bring back some of the coins to the exchanges and the price crashes, and all the people who are newbies who have joined in the bandwagon on the way up start selling off in a panic, only to sell off to the guys that just sold their Bitcoin at minus 30% at the end of the correction. I can't stress this enough. Don't ever sell when the market is dropping. Don't, especially when it's Bitcoin. You shouldn't. Even if it was the peak of the bull market, even if it was, let's say it was that peak that marked the end of the bull run, just wait. In a few years' time, you will be right again. Like they say, the clock is always right. At least twice a day. At least twice a day, the clock will be right. No matter how dead the clock is, it's going to be right twice a day. In the same way, you have cycles in these markets. And if, for instance, you bought at the tip when Bitcoin was 20K in 2017, 2018, by December last year, you will have broken even. And by end of January, essentially, you have doubled your money. And if you're still holding by now, you're 300% of profit. So really, you shouldn't be panicked into selling your position, especially when it's Bitcoin. If it's altcoins, it's a totally different story. But when it's Bitcoin, you need to be conscious that this market comes in cycle, and you need to look at the long term. Um, Interesting story about Ethereum. It keeps making new all-time high. And I remember someone asking me that, is it still going to go higher? Of course, Ethereum is going to go higher. Ethereum is like the Amazon of blockchain, of cryptocurrencies. Why do I say that? Bitcoin provided the framework for peer-to-peer transfer of value on a blockchain, which is transfer of money. So we were able to transfer money from peer-to-peer on the blockchain using distributed computing because of Bitcoin. So everything else is built on Bitcoin. It's built on the philosophy of Bitcoin. But what Ethereum has done is it's taking it a step further by making that blockchain a storage of code. So it's no longer just a storage of value that we're transferring money. Now you can transact programs on a blockchain, and that has opened up a whole lot of opportunities for so many other things to happen on the blockchain. And that's why Ethereum is so powerful. I'm not saying Ethereum is going to be forever powerful because it already has strong contenders, but because of the value that it provides, it's almost like a blue chip stock like Tesla or Apple. It's going to be very valuable for a long time. Someone asked me, I think earlier in the week, and they were saying, where do you think it's going? I said, yeah, Ethereum was projected to get to 10,000, but at the current rate, it might actually go 20K or 19K by the end of the year, because when people suddenly find out that Bitcoin is now sitting in the hundreds of thousands, and they're like, okay, Bitcoin is too expensive, let's go for a lesser alternative. And then the institutions that are already aware of the capabilities of Ethereum and are already positioning with ETFs and all that, naturally, Ethereum will be the next best option for them. So there's a lot of room for Ethereum to grow. And when we look at the technical analysis of market dominance for Bitcoin market cap, you see why there is an opportunity for Ethereum to actually make some very significant moves in the months to come. So Ethereum is still a good buy for those who have asked. And if you plan to hold till at least Q4, you can definitely, on Ethereum, you can definitely make anywhere between 100 and 500, depending on where the market takes us. New coin spotlight today. I'm going to be adding this every week just to talk about a particular cryptocurrency and talk about things that fascinate me about that particular cryptocurrency and where I think the cryptocurrency is going. So today's spotlight is going to be on a coin called, or a token called Matic. Originally called Matic, now called Polygon, but the ticker is still Matic. So now they're calling themselves Matic Polygon or Polygon Matic, but the ticker is still Matic. Now, Matic started out as what do you call them now? A blockchain services provider, and then they decided to go into what you call layer 2 service provision. I'm not going to get too technical. I'm not going to get too technical on this one, but what they've done is they're building an improvement upon the Ethereum network, and they've now merged with another company called Polygon. So because of that, the price of Matic has been going up consistently in the last few months, and I'll show you the charts. And I remember telling people last week or so to buy Matic, and I was saying to one of my friends that even I didn't buy additional. I had a few of it, but I didn't buy additional. But I felt that the price had good upside, but I think it's actually going to do very well, especially because Ethereum's upgrade seems to have stabilized, meaning that the upgrade in June, which will make Ethereum become deflationary, is actually going to improve the odds of this particular solution. So I think Matic is a good buy. Like someone asked on the WhatsApp group, it's still a good buy. I think it could very easily do anywhere between $5 to $10. It's currently sitting at I think around 80 cents. I think it touched on 90 something cents earlier on, but it's sitting at 80 cents. I think it's a very strong buy and has the potential. It's 3 billion in market cap. I think it has the potential to double its market cap at the very minimum. So a good one to add to your portfolio, either in the short term or in the long term. If it does hit 10 billion in market cap, then definitely it starts to get in the top 100, and then it might become an institutional blue chip digital assets. So one to keep in your radar. So let's talk about the vital signs, the crypto vital signs. We can see that we've made some gains in terms of market cap. We're back to 2.2 trillion in global market cap. Bitcoin is about 49% of that. So Bitcoin is still above a trillion, it's back above a trillion. Altcoins is now officially above a trillion. That is huge. And I'll explain why that is huge. See, if we compare the global equities market, which is like 250 or 255 trillion, with the crypto market and with the altcoin markets, you understand that traditionally, crypto markets will usually have altcoins as a fraction of overall crypto markets will usually be like 30% or sometimes 20%, and Bitcoin will cover the rest. But now you have Bitcoin dominance dancing between 48, 49 in the last few weeks. And then in the last 1 week, when we had that correction, we gained back 32 billion on overall crypto markets. And out of that gain, 292 billion went into altcoins. So it tells me that definitely the bias is towards altcoins, and that's likely to remain for at least 3 to 4 weeks. So that's where we are in terms of market capitalization. In terms of sentiment, we're neutral, which is a very strange one as well, because you usually find this fear and greed index in neutral. It's usually sitting between greed, extreme greed, for the most part, unless there is some act of God or some market chaos, then you find it in fear. And as I usually say, if there is no indicator, if you're not using an indicator, if you only follow this indicator and buy when it is, you buy when it is neutral or fear, you are always going to make profit on Bitcoin because it's a very, very solid. It's a multifactorial sentiment indicator that takes a lot of things using AI into consideration. So it's usually a very good gauge of where we are in any mini cycle of the market. So now that we've had the correction, it means that we're about to take in another leg up. So if you look at the last 4 weeks, it's been greed, extreme greed, greed, greed. It's been greed up until about 6 weeks ago when it was neutral. So usually you will see that when it gets to extreme greed and it starts, hitting on 80 or 70, no, usually not 70, but about 80, when it gets to 80 or 90, you know that a correction is coming on the way. Then in terms of where we are on the overall market position, where right now at the beginning of thrill, we're getting back to the beginning of thrill because, like I said, when we had the correction last week, we're sort of jacked back into belief because people are already getting excited, and all of a sudden everybody was scared. What's happening to my portfolio? Are we going to lose money? And we sort of slid back into belief, and everybody's like, okay, what's going on here? And everybody's asking me what's going on. I'm trying to convince you, and I know nothing is going on. It's just, normal behavior. It's like getting on a boat and you're being rocked back and forth because a bigger boat just passed, or you're on a plane and you had the turbulence. And a long time, frequent flyer is telling you that don't worry, this particular route is usually like that, especially when we're about 3 hours in. Once you pass this turbulence, you'll be fine. So it's exactly the same thing. We're back to the beginning of thrill, and the reason we're back, as I'll show you on the chart, is we've covered up for the dip that we had last week, essentially. So from next week, from a technical standpoint, from next week, we're likely to keep going up or go sideways. We're not likely to go down. And I'll explain all that on the chart, as I said. So when we do get to thrill, you will begin to see some very crazy price movements. But definitely euphoria is still far off. That's what I'm sure. But when we get to euphoria, you know that we're going to have a huge plunge, because at that point in time, everybody will have been, quote and unquote, had their fill of the markets, and they want to take profits. So this is our reference point, is our site map to keep us grounded, to know where we are in the market, and not to get carried away. by the noise in the markets. So in terms of technical analysis, as I said, let me reload this stuff. I'm going to start with, let's start with Bitcoin. Let's start with Bitcoin. So this is Bitcoin's weekly charts. Now, the reason I brought up this chart is because the weekly chart is one of the strongest indicators of the market direction. And when you see the formations on the weekly charts, it helps you to take a long-term view of what can be happening on the market. So from essentially October 5 last year, we've been in an uptrend, and that uptrend is still sustained. But a few things have happened. When we got to March, we broke out sideways, and we've more or less remained sideways since March. So we've had very huge swings since March. We've gone as low as 50, we've gone as high as 65, but we've essentially been sideways. But what catches my attention here, and I'm going to explain, what catches my attention on this weekly chart is the current formation I'm seeing, and I'm explaining the formation. Two things. We were overheated on the RSI. So the RSI is an indicator that tells you whether the market is overbought or whether the market is oversold. It's called relative strength index. When it is overbought, you can expect correction at any time, and that's what happened here. When we got here, we're already like, I think we're 88 on the RSI, almost 90. So naturally, the market will take a correction. When it did take a correction and went back up, we were still oversold until 2 weeks ago. I mean, overbought until about 2 weeks ago, 3 weeks ago, when we started taking this correction. Now, because we've taken the correction, we've gotten into like a neutral area. The neutral area is between 70% and 30%. We've gotten back to the neutral area, which means we have more room to go up. 1, 2. This gray area, or this green shade that you can see on the chart, is called Bollinger Band. It's a standard deviation measurement of price action that helps you to determine whether the price is tilting to the upper standard deviation or the lower standard deviation. Like you can obviously see here, the price has been kissing the edge of the upper standard deviation for a very long time, and now we've broken out, like coming to the middle. So at the minimum, because it is a bull run, there is very low tendency for the price to hit the lower standard deviation on a weekly chart, because that's a longer time frame. Or if you look at this candle, you have two opposing candles. It's a candle pattern called bullish engulfing, meaning the candle after is bigger than the candle before and it's in the opposite direction. It's a reversal candle, meaning it's a change in bias. If you see this in an uptrend and there was a correction prior to that, it means that when the next week starts, there is a very high chance that the trend is going to continue upward. And that was why I drew that ruler expansion, that if the trend continue upwards from 57,000, before we hit the edge of the median again, we are looking at almost 70,000, which is 23% from where we are. So at the minimum, if you buy right now, you have a 20% gain ahead of you at the minimum. On the daily chart, it's even it's almost around that, but on the daily chart, you can see that we actually took the plunge to the lower end of the price standard deviation, and on the daily chart we have headroom up until about 65k, or it's almost 66k before you can think of any correction. But usually, what we've seen so far is that you've seen this kind of immediately you make a new high, you have a drop. So the last high we had was 61,000. The next one was 64.7. The next one is going to be like 69, because bear in mind that the weekly chart has its top Bollinger Band at 69. So the next expected all-time high, technically speaking, is 70k or 69, depending on who leaves the others last. So you might get to 69.9, or you might get to 70k one, and you see a correction. So that's that for Bitcoin USDT. I wanted to show the dominant. I think this dominance chart. Now, this is the Bitcoin dominance chart I was talking about. Now, what Bitcoin dominance chart does for us is it sort of helps us to understand when Bitcoin is going to sort of not perform rapidly and altcoins are going to moon. Altcoins usually moon when Bitcoin dominance is below 60%. So what you have here on the y-axis is the percentage. So it's been below 60% now since when is this? Since March. No, not March. Yeah, it's March. It dipped below 60% in March, then has been going since later in March. So now on the daily, we're sitting at 50%. So today, actually, we dropped to 49% today. It's currently back at 50%. From a technical standpoint, if we go to the weekly chart, and I just need to show that, we have a what you call a Fibonacci resistance line at 50%. These are mathematically derived lines on price action that tells you which area you're likely to have pauses in the movement of the market. So as you can see, it's touched this line 50% now. If by next week we open below 50% or we close next week below 50%, then you can be very sure that we're going to get to 45% very quickly. And if that happens, then altcoins are going to blow up for like 2 or 3 weeks, like crazy blow up, like they can be doing 100, 200x every other day. So usually Bitcoin big time whales and retail investors are always on the watch out for these charts, because this dominance chart tells you when to close out your altcoin position. When this starts to move back from a weekly standpoint, then it's time to exit altcoins. And I think we're going to have that in another 2 or 3 weeks, 2 or 4 weeks. The last time we visited this point was in 2018. That was the last time we visited 49%. So if we do get to 45%, which was almost like the middle of the altcoin boom in 2018 January, then we are sure that we are coming to the very close end of the altcoin season. So why am I saying all this? I'm saying all this for people that are holding alts to know that, well, your alts have not reached their full potential, and they might not until a few weeks' time. In terms of Matic, which is the coin in focus that I wanted to share with you, Matic has been doing phenomenal for the past, So if you take this week, and I mean this particular week, it's an abnormal reaction for obvious reasons. So it's gone from, this week it's done almost 200%. It's gone from 38 cents and peaked at 94 cents. But if you take that out, if you remove that skew, you will find out that it's been relatively volatile. I remember last year I bought some and sold last year as well. But because they've now merged with another company and they're now doing some additional developments in terms of layer 2 solutions for Ethereum, I think it's going to be a good short-term buy and a good long-term hold. So this chart does not do justice to what's really happened, because there's a very strong fundamental skew. From where I stand, I think that the worst of the correction that we'll have on Matic will be probably the next 2 days, probably come back here to 70 cents or 77 cents. But I think once it crosses $1, it's probably going to remain above $1 and keep going. So for people who have asked again, Matic is a good buy, either short-term or long-term. So I think that's what I wanted to show on technical on the charts. Let's get back to the crypto drip we have for today. So the crypto drip I wanted to discuss today was because of people who are sort of bemused around, where is the real money? Is the money in decentralized wallet? Is the money on the exchange? Is the money where is the money in this crypto? So I just wanted to sort of do an architectural representation of what is actually happening. So the blockchain is a closed loop system, meaning everything that is happening on the blockchain stays on the blockchain. Technically speaking, really, that's what's happening. Everything that's happening on the blockchain stays on the blockchain. And because it's a closed loop system, for you to join, you need to, when you plug your computer, you plug your node to the blockchain, you need to get the data from all the transactions that happen since the genesis of that blockchain. Otherwise, you are not a valid node on the blockchain. A valid node means you're not a valid participant to that blockchain. Because if you go back to some of the earlier crypto tips I've done, and for guys who have taken classes in trading fundamentals 1 and 2 or overview of cryptocurrencies, you understand that the blockchain works on the principle of distributed computing, meaning that the application does not sit on a client server model. It sits on each of the participating computers. And because of that, if one computer is down, the others will keep going. And, if the blockchain is big, like that of Bitcoin, where you have like, I don't remember how many tens of thousands now in terms of nodes that we have on Bitcoin blockchain. But you need to look for all those computers and shut them down, which is practically is possible for you to stop the Bitcoin blockchain from propagating. As a matter of fact, if you shut all of them down and one of them comes back online, you can still continue to propagate that blockchain. That's the beauty of what happens on the blockchain. Now, to make this useful for the common man in his current state, what has been done is exchanges and various companies have now plugged into blockchain as nodes themselves, get the data, and now present the data in a different format, because on the blockchain format, it's strictly guarded by code, meaning you post a transaction, it's verified by the miners or the nodes that contribute to the blockchain, and then it's posted on the blockchain ledger. And then once it's posted on the block, nothing can change it forever. That's how the blockchain works. So, but for blockchain to be useful, especially cryptocurrencies to be useful in the current day, what people have done is they've now built what you can call layer 2 solutions on top of the blockchain. And that's the layer 2 that I have in the graphical representation. So you have the miners have their nodes and their wallets on top of the blockchain. The exchanges also have wallets that are directly on the blockchain. And then you can have individuals who have their wallet directly on the blockchain. What does this mean? Let's take an exchange for like Binance on Coinbase and Bitcoin. Binance and Coinbase, being an exchange, will have anywhere between 5 and 10 exchange wallets on the Bitcoin blockchain. Why? Of course, for security reasons, they won't keep one wallet, but because they need to service customers who want to transact in Bitcoin and will want to transfer Bitcoin to other parties, they will need to have their own wallets represented directly on the blockchain. So what happens is, when you sign up with Binance and you have a Binance account, you get all of these accounts at the lower level, like your crypto wallet, your fiat wallet, your futures wallet, and all that. All those wallets that you are getting from Binance, they are like database wallets. They're not on the blockchain. They are like client server model. It's like having an account with your bank. But that's the model that allows people like Binance to service customers and provide those services. So when you take those transactions and say, I want to send Bitcoin from myself to Ayobami or Lukman, my friend, and I want to send it to his decentralized wallet, which is a wallet that is directly on the blockchain. What then happens is Binance takes my instruction, goes to their own wallet, which is their own blockchain wallet, takes the amount of Bitcoin that I've requested to move, then look for this guy's wallet and the wallet address I provided, send it to that wallet. Because it's directly on the blockchain, it shows up directly on the blockchain as a transaction sitting on the blockchain. If this wallet wasn't a decentralized wallet, let's say it was another exchange wallet, like I was moving from Binance to KuCoin or Crypto.com or Coinbase, what then happens is blockchain, Binance will send that Bitcoin from their own crypto wallet to Coinbase crypto wallets on the blockchain. Sorry, I mean their blockchain wallet, not crypto wallets. They will send it from their blockchain wallets to Coinbase blockchain wallet. When it gets to Coinbase, because it already has the tag as an exchange account, and it will have an address that's an exchange account address, Coinbase will now look for that address within their own customer database and then post that value to their customers' accounts in the customer's crypto wallets. I hope my explanation makes sense. If it doesn't make sense, you can ask me when I ask for questions. But I need to explain this so that people understand where the values are sitting. So if you have a decentralized wallet, your money is sitting with you because it is sitting directly on the blockchain. As long as you don't move it to an exchange, I mean, your key, your money, meaning, if you don't lose the key, you have access to the money. If you lose the key, then the money becomes a roaming entity on the blockchain because nobody has access to it. It's essentially lost. But if somebody gets the key or hacks your wallet address or anything, then the person takes the money. On the exchange side, it's a bit different because the exchange is operating like a bank or like a stockbroker. So the money you have with them is held in trust on their own side. So the exchange themselves usually will have what you call the blockchain wallet, which is what they call it the cold wallet, which is the real wallet that is holding the crypto. Then they have the hot wallet that is just holding the data. I'm saying that again. The exchanges have two wallets. They have hot wallets and they have cold wallets. The cold wallet is the actual wallet on the Bitcoin network, using Bitcoin as an example. The hot wallet is a database record. That's what it is. It's a database record of what is held. So when you hear that an exchange has been hacked, two things can happen. They might be hacked, and usually people don't hack hot wallet because there is no money there. It's just records that is there, technically speaking. So what hackers are looking for is a way to hack the cold wallets or the cold wallets of the exchanges and part away with their money. So if they hack the cold wallets, they take the money away. If they attempt to hack the hot wallets, they might not be able to take the money away because usually the exchanges have risk mitigation processes or protocols in place that allows them to block big withdrawals for a while till they can check it out. It didn't used to be like that until until a few years ago. So I was having a discussion with one of my friends and he said he was trying to withdraw 32K from a particular exchange. And he was saying that the money didn't drop until maybe like 24 hours. I can't remember how long. And I was telling him that, of course, that money is a bit big. 32K at once in one transaction is a fairly big chunk that naturally it will flag up some things that usually, the flag will have been maybe like 10K or 10K and above. And that because he has not moved that kind of money before, usually will flag something within the system. So there are risk management systems within those companies' software that will help them see there's a large amount being requested to be moved because all this is happening electronically on their database. It's not sitting on the blockchain. But if it does move on their database, then they're going to be liable because they're going to have to pay the recipients on the blockchain. So because of that, it's relatively difficult for hackers to hack exchanges on their hot wallet because they're going to face their risk mitigation protocols, which might block it off altogether or flag it. But there are instances where exchanges get hacked with their cold wallet, then they cut away with value, meaning they move the funds inside the blockchain to another blockchain wallet. In the recent times, I think KuCoin was the last major one that happened. They retrieved like 99% of the funds because, of course, it's the blockchain, and in today's world, you can't off-ramp your money without people knowing about it. So if you move any money on any blockchain, especially Bitcoin or Ethereum, there are thousands of eyes that are looking at the blockchain every minute. So when any big money moves, we best be sure that at least 10 companies have that data on their tracker and all the exchanges have to check data. And of course, people like FBI and CIA probably have that. So every whale movement that happens, the FBI is probably trying to find out, okay, who moved that money from where? So if it moves to an exchange wallet, like, okay, they'll go and ask the exchange, Boy Alpha, this 10,000 or 5,000 Bitcoin, who is this guy on your exchange? Because the guy will have identity on the exchange. So usually when exchanges are hacked in recent times, they just follow the money and they're able to catch them. From the last report that KuCoin gave last year, they were hacked for about 180 million. They got about 179 or not 179, maybe like 160 million back in the first 4 weeks, and they caught one of them. So most likely the guy will spill the beans and give them all the information they want. The one that happened before that time was major one was Binance in 2018. They refunded everybody's money and then they blacklisted those wallets, and they were able to trace where those wallets were moving funds to. And up till now, if you want to move any money on the blockchain on those wallets, it's going to tell you that this is a blacklisted wallet. That you should be careful, confirm that you actually want to move money there. So it's a lot more difficult to hack exchanges. But I mean, it's a 50-50 risk on where you want to keep your funds. Everybody will generally say keep your money in your wallet, but you're bearing the risk 100%. In today's world, if your money is with a big exchange, I mean, if your money is with Coinbase, there's no issue because Coinbase is a publicly listed company now. Even with any of the US exchanges, including Binance US, there's nothing that can happen because otherwise, the SEC is coming for them. And for the very capitalized ones, it's a bit, now that they have more than enough money to fend off any attack, not only on the security part, but also they have all sorts of insurances now that allow them to bounce back. So it's a personal decision on the weighting where you want to, allocate your risk. If you are completely risk averse, the best option is to keep the funds on a decentralized wallet. If you want to balance the risk, then you can consider a 50-50 or a 60-40 weighting. But if you're in the market for a short term, like less than 6 months, then personally, I don't think it's worth moving the money around, especially if you're dealing with a big exchange like Binance, Coinbase, Crypto.com, even KuCoin, or Kraken or Gemini. Those are very massive exchanges with a lot of fiat liquidity. So I'd like to explain this so that people understand what the underlying framework is. So when you're opening an account with the exchange, you're opening a hot wallet, quote and unquote. But because the exchange has the record of the hot wallet, they're going to be keeping the crypto equivalent of your money on the blockchain in the cold wallet. So that if you request to move it, then they move it on the cold wallet to where you want to be. So for instance, if you wanted to move your money from your Binance Exchange wallet to your Trezor Ledger, which is a completely decentralized external wallet, because you will have pre-configured Trezor or Ledger with a Bitcoin application that allocates an address to your external device, that fund is going to go directly to your device because it's a level 1 of a blockchain transaction. I hope I've made some sense in all the ramblings I've made today. I think I'm done for the day. If you have any questions now, I'll ask you to unmute on. I'll allow people to unmute themselves on Zoom. And if you have any question on Instagram, just type it into the question field, and I'll take your question. Thank you. If there is no question, is that I've confused everybody or everybody understand? I don't think it's the latter. Where do you see BNB at the end of the year? Okay, that's the first question. So somebody just asked a question on Zoom. Now, where do I see BNB at the end of the year? BNB is Binance Chain Coin. Binance Chain Coin is an utility coin for Binance, and it has become like a, I don't want to use the word start strike. No, it's an utility player. Binance Chain Coin, you started out as an exchange coin, meaning you can use it to settle fees on the exchange at a discount. But it has gone beyond that now, and it has become the coin for the Binance Launchpad. It has become the coin for the Binance DeFi. It's the same coin for Binance NFT. They're launching NFT in June. Very easily, Binance can become the Ethereum of 2017 in terms of market performance. So what I mean is this: in 2017, Ethereum performed so well beyond what Bitcoin could have done, and then did like multiples of. I think Bitcoin did maybe like 10x. Ethereum did like maybe like Ethereum went from, what am I saying? Ethereum went from $10 or something like that to 1,003. Crazy stuff. So Ethereum was like one of the best performers on major major capitalized tokens in 2017. With what Binance is doing this year, they're very well positioned to be one of those. I mean, it can go to 5,000 very easily because the utility is just too much, way too much. On top of that, they are doing what you call an annual, a quarterly burn, where they dispose of, permanently dispose of some of their funds. So because of that, I mean, Binance can go to 5,000 very easily from where it is today. I will take all the other questions shortly. Mr. Yobami, do you have a question or you want to pass a comment?
No, I don't have any question.
Okay, sir. Mr. Wali, do you have any question?
Not precisely, just to thank you for all you and what have been doing. So thank you so much.
Okay.
No question.
So I will read out.
Okay, Jamie, I have a question.
Yeah, please hold on a second. Please hold on a second. Let me attend to. So I have a number of questions that have come in. I have some that have come in on Instagram, and I have some that have come in on Zoom. So number one question is: does it really make sense to sell at extreme greed and buy back at fair? Yeah, if you want to swing it, if you're available, you can adopt that strategy. It's called swing trading. So you sell at the peak and you buy at the bottom. It's a strategy to increase your portfolio. But it means you have to pay attention and you have to attend to the cycles. Otherwise, you might be caught off guard, quote unquote. So that's the answer to that question. How does Cold Wallet get updated with position of Hot Wallet such that the two are in sync? I mean, thank God you're an IT person, the person that asked this question. In the banking system, you have batch jobs that run periodically. Some of them run end of day, some of them run 12 hourly, some of them run 3 hourly, some of them run hourly. Some run every 10 minutes. Now, the exchanges have batch jobs that update their position periodically. I mean, I don't know. I don't have access to their codes, especially people like Binance. But what I know is that for every out of exchange transaction, there will be a corresponding blockchain transaction. If not, there is a corresponding to, because anytime they say the withdrawal is successful, you can actually go and check the transaction ID and go to the Etherscan or what's it called, or Blockchain Explorer and see that transaction. So when you say I want to transfer from blockchain to Coinbase, what they do is they deduct the value from your hot wallet. They go to the cold wallet, deduct that value from their cold wallet, and issue a blockchain transaction on the cold wallet that sends that money to Coinbase. Now, when Coinbase gets that money, they do the same in reverse fashion, meaning once the money shows up on their blockchain, because they will have their own internal software monitoring their wallets, then they look for the address that is for the recipient within their own customer database, and then they update the hot wallet in the customer database. So it's almost like it's an automatic thing, because for them to move out the money, they need to carry out a blockchain transaction. It's a different thing if you're moving from okay, I'll answer the question, just hold on. It's a different thing if you're moving from your own wallet to my wallet and we're both on exchange, on Binance Exchange. That one is a database transaction. Doesn't affect anything. So yeah, that one is an easy one. But for transactions out of the exchange, they need to go to the blockchain and it's automatic. They will have to synchronize at the time of committing that transaction. I think that answers your question, what we said. Please, what's the prospect of Cardano's African launch in the short term and long term? I think I've talked about Cardano before now, and I've mentioned that Cardano has the potential also to be a very strong contender with Ethereum this year. I think that was about 3 or 5 weeks ago when I spotlighted Cardano. Now that they've talked about this partnership with Africa, I think it's going to give them some significant boost, especially if people start launching smart contract projects on them. So what is making Ethereum so powerful now is because of the platform that Ethereum has now. We have many of the tokens that we have today, and we have tens of thousands of them. So if people start creating projects on Cardano like they are doing for Polkadot, Cardano can easily get to $100. In fact, more, because Cardano doesn't have the, okay, well, it has more volume than Ethereum, but people are not building on Cardano as much as they built on Ethereum. And Cardano has already offered like an on-ramp that allows you to carry your codes from Ethereum's blockchain and paste it on Cardano. So yes, Cardano has significant room for growth this year, but it depends on, they're usually not a very, they're rigid. They're rigid class. I don't want to use, they're not classic. They're just a rigid technology body. They're like nerds, really. They followed their timelines. They followed their roadmap. They're not hurried in any way. So this launch that they've done, it might not move the price much, depending on how people receive them, but it might also move the price significantly. But I mean, at least I expect Cardano to do anywhere between, Cardano is already $1, I mean $1 plus. I expect it to do anywhere between 10 and 100 this year. 100 is a far reach, but I mean 10 is definitely achievable. Yes, I know Cardano is crawling, Lukman, but all cryptos appear to be crawling, or suddenly they wake up and you see them at 20x or 15x. Ethereum Classic, I'm not sure about Ethereum Classic, Obi. I wouldn't invest in Ethereum Classic. And I think I've answered that question before. The reason being that Ethereum Classic was the original Ethereum blockchain until it was hacked. And instead of rolling back on the blockchain, the owners of Ethereum blockchain at the time, Vitalik and the current owners of Ethereum, of Polkadot and Cardano, they decided that they were going to fork the network, F-O-R-K, meaning they were going to split the network and create a new network. So the new network that they created, yes, yes, I need to explain that so that Google or YouTube doesn't censor me as speaking expletives. So they needed to create forking is a technical term used to either an upgrade of an existing network or creation of a new network. So now Ethereum, the new Ethereum, is the upgraded Ethereum Classic. So people for sentimental purposes still hold on to Ethereum Classic, but I think Ethereum Classic is still susceptible to hackers.
Yes,
but I think the majority of
I just wanted you to come and have a look and then give me the options that I
is still sitting with the hackers. So I think that's why it's not getting enough traction, because if the original hackers still have the bulk of the token, then they can decide one day to dump on everybody. So that's why it's not as lucrative as Ethereum itself. Yes, then someone asked about learning about the wallet. So we have a number of courses that you can take. Sherry, if you can hear me on your number, I will give you a number of courses that we have on offer that you can take that can help you understand some of the things you're discussing very easily. Then questions there's a question that says, at what percentage of BTC dominance should we start liquidating the altcoins? If BTC dominance gets to, where is that chart? If BTC dominance gets to 45, I will start reconsidering. No, where is it? Oh, yeah, myself. I had a, okay, let me just look for it. Index, let's see. Yeah, so if BTC dominance gets to 45, I will consider to commence liquidation. The reason being that, let me show you the weekly charts to explain the technical underpinning of that decision. So you have been in a downtrend essentially on the weekly charts in terms of market dominance since December 28th, the week of December 28th. That's when Bitcoin dominance has been going down. Technically speaking, it's just breached the technical line here at 50.07. So right now it's sitting on 49. If this week closes below 49, definitely alt season is in play, full blown from the first week in May. However, if it breaks this line, then it's obvious that it's going to initially attempt to break back up. If it doesn't succeed in breaking back up, then it's going for a downward plunge. The next line in downward plunge is 49.77, so which have about 45%. So if Bitcoin dominance gets to 45%, and we see a change on the weekly candle, so like you see something like this, for instance, you see a green candle after this kind of red candle, then obviously it's time to liquidate. But if it continues, then it means that might be a protracted altcoin season, but I don't think so. I think we're just going to have like a 4-week window for altcoins to perform their wonders in the month of May. It might be 1 week more or 1 week less. So that my assessment is that we still have that window of 3 to 4 weeks for Bitcoin to drop to this bottom and go back up. Having said that, though, 2 things to take into consideration is that the weekly dominance chart is already in an oversold region, which is 22. Anything below 30 is oversold. So I will be watching out for what happens. Once this flips green on the weekly chart, then it's time to liquidate. Yeah, altcoin will celebrate birthday for UAY. Definitely, they'll celebrate birthday. It's looking like a very, very humongous altcoin season. And there was what's it called? There was a rumor. Yeah, I didn't touch on that actually. I should have. There was a rumor last week that maybe what's their name? Facebook was buying Bitcoin and adding Bitcoin to their balance sheets. I usually will say, like many people will say on the market, buy the rumor, sell the news. The reason I say buy the rumor is that there is no smoke without fire. So when you hear a rumor, is that thing has already happened or is being mooted. In this case, so here is what happened. The day before Facebook was releasing their Q1 reports to SEC, the rumor comes out. Then Facebook releases their Q1 results. Nothing is there. But the rumor is not about the Q1 results. The rumor is about what happened between this week and last week, which is Q2. Essentially, you're not going to know about it until the end of the quarter, because that's when they're going to report to SEC. So when people say buy the rumor, sell the news, this is exactly what they're saying, because when the rumor comes out, it means there's fire somewhere. That's where you're seeing the smoke. So I won't be surprised when Bitcoin is 70K or maybe like 80K, Facebook will post in their SEC reports that, okay, we bought Bitcoin at the bottom at 48K in April, and then the price will go crazy and everybody will start shouting, oh, Facebook is buying Bitcoin. But by that time, of course, it's already too late. So that's my commentary on that particular one. I had somebody who had a question on Zoom. Yeah, you had a question.
Yes, Dr. Demilade, it's me, Aki.
Okay. Okay. Enzo,
Can I go
what's your
ahead?
question?
Yeah. So mine is two questions. I think someone asked something similar, but mine is a little bit, I'll tweak it a little bit, which is, so when the market is down, right? And you have one of the altcoins moving in an upward position, does it always make a good sense or good strategy to swap the downside token to that upward altcoin? Say, for example, in the season, what happened to Bitcoin when it was at as all-time low as 48K, right? And you have Dogecoin, or maybe not Dogecoin, or Binance, or one other one going on all-time high. Does it make sense at that point to make a switch, not sell, but swap for that altcoin in order to sort of average your loss, gain, and then switch back? Or is it very risky?
So what are you talking about? You want to switch from Dogecoin to what?
No, I'm just using Dogecoin as an example, not necessarily Dogecoin, but I'm just saying altcoins generally, in terms of, for example, when you have you have a portfolio where one coin is down by almost 10%, and another coin is on the trendward outlook. It doesn't make sense to swap that 10% down coin to the other coin just to average your loss while you go back, or it is not a wrong strategy to just wait till it comes back?
Well, different coins have different behaviors. That's what I'm going to say. And because of that, it might be a regrettable action. It looks smart on the surface. It would be the right thing to do if you are dealing with any other asset class, say indices, stock, forex, or general portfolio management. In general portfolio management terms, it looks like a smart decision to do, meaning you are rebalancing. It's what the hedge fund managers call rebalancing. Yes, like Lukman said, it's easier said than done. That's on the side. Well, if you want to rebalance, you're assuming that the more you are rebalancing for is it's going to pick up later, and that the more you are selling off is still not going to go further. So I'll give you a good example. There's a coin called Bakery Soap, I think, on Binance. And the only reason I ever got involved with that coin was because there was another one called Cake. And if I think somebody mentioned on this call that he made about $30-something thousand from buying Cake with like $2,000 at the beginning of the year. So, but I didn't buy Cake at all. I wasn't even interested because I was like, those DeFi coins are always very crazy. So I wasn't in the good headspace to even consider it at that point. Yes, Kingsley. Sorry,
you can let them know, and then there don't be need for internet, so they can come up with
someone. Okay.
So what happened was the guy bought it at 2K, bought Cake at 2K, and I think he sold for like 40-something thousand. So there was this Bakery Soap that just came out then. It was a new DeFi platform, and someone just mentioned it in passing, and I just like, okay, just to say that, well, let it not be that I heard about it and I didn't take any position. So I bought like 200 or 300, I can't remember. But I just left, I just bought it like, just to have a representation. And so we went on, there was that seesaw in February, there was seesaw in March. Then one day I looked at my account and I saw Bake was like 1,000 something. Like, how is that possible that this thing must have done, like 10x? So, but I didn't even remember how much I bought it. So at that point in time, I just took like maybe like half or something else. I sold off some part of it and then forgot about it. Then one day I needed some funds and I was counting my account and I saw it again and I was like, okay, this thing is still going up. It won't make sense to sell it now. So I decided to stake it and then forgot about it completely until this week when some people on some of the forums were saying, oh, Bake is baking. So I was like, okay, what's happening to Bake? And then I saw that he had done like 160% in the week. So I was like, okay, I think I still have some Bake. Then I went to check my accounts. I didn't see any Bake there. And I was very bad. I was really pleased with myself.
What happened?
What happened to my Bake? When did I sell it and I didn't know? But what happened was that I staked it. Staking means you move it from your accounts and you move it into like a fixed deposit arrangement with the exchange platform. So it wasn't showing in my normal account and I've totally forgotten about it. In fact, I remember saying in anger, I deleted it from my portfolio tracker because I like, how could I have sold this thing without recording it? Only for me to discover that I didn't sell some of it. When I went to check the balance I had, that's grown to like 4K, or
Wow.
the one I had not sold. So in what I gave this example, it's a real life example. I gave the example just to just to explain to you that you can say, yes, I'm going to sell off some part of it to rebalance my portfolio, but then you sell it off, and then the one that you sold off or took off part of it then grows like another 500% or another 12,000%. And you're now asking yourself, oh my God, why did I balance? I should have just left it there to grow as much. So yes, it's a good idea, but it's not predictable. Anything can happen. And like I said, anything can really happen in this crypto world. I have experiences and I've seen with my eyes that anything can happen. I mean, $100 can become, can become 10,000 or 20,000. I mean, it's crazy, but it's understandable. It's a new asset class. There's very little money in it. So if you're not in need of the money, and if you're not in need of the money, there's no point. But if we are going to have a cycle shift like from altcoins to Bitcoin, and you get a signal from me that, okay, guys, might make sense to move your money to Bitcoin, then it might make sense to swap it for Bitcoin. But if you're not in need of the money, the best you can do to boost your portfolio is to use the profit from existing ones, take some profit from existing hyper-performing assets, and use to take position in new opportunities. I think that's the best strategy.
Okay.
So don't think about it as you covering your loss, because at the end of the day, like Lukman just said on the chat, patience is key.
So that
I have some personal experience that is saying, he's saying with a lot of emotions.
Hello.
Yeah.
Thank you very much. And I think I get your drift, and I agree. Now I have another one. This one is just your recommendation. And honestly, I'm going to take you with, mixture of pinch of salt and based on the way you've always advised us. One is, what's your take on 4 particular coins I want to talk about, and in order of potential: Chainlink, Basic Attention Token, Matic, EOS, and Flamingo.
Okay. FLM. Let me start from FLM.
Which one?
FLM.
Flamingo?
Yeah, Flamingo. I already mentioned Flamingo as one of the coins to buy. I think I mentioned it in February. At that point, I wasn't even sure whether it was available in the Binance US platform. So I don't think I mentioned the game, but Flamingo is a very strong coin. Significant potential. So people say it can do 100x, but conservatively, you can expect 20x from Flamingo. It's a newer project, so I have some level of risk aversion on it, but it has potential. And because it's a newer project and we're on the cusp of a very significant altcoin season, it's a good coin to buy. So for people asking for new coin, Flamingo is a good coin to buy. So I'll pick EOS next. EOS is an old coin. I think for the benefit of context, I'm going to open up CoinMarketCap just so that people understand what we're talking about. Okay. EOS should not be EOS. Where is EOS now? EOS used to be like top 10 in the last bull run. It was we can call it a clone. It was one of those clones of Bitcoin and Ethereum back in the days. Allowed developers to build apps. So it was like an Ethereum copy, really, back in the days. Made a lot of money for early holders. It's now heavily capitalized. I don't have any stake. I sold all my stake near EOS a long time ago. I don't have any stakes in EOS. It's currently $6. I don't see any significant traction here.
You don't see any significant what?
I don't see any significant traction. It might still do like 2 or 3x in this season,
Okay.
But considering that it's already number 26 in terms of market cap, sitting at 6 billion, that's huge. I'm not sure there's anything that's going to move it significantly. So if you have to, in order of elimination, EOS is going to be the first one I'm going to eliminate. Matic already recommended Matic for obvious reasons and for reasons I discussed today. BAT is another long-term coin, basic attention token. It's been around for a while, and as a matter of fact, BAT is the token that rewards you for using the internet with their browser. So they have Brave browser. As a matter of fact, I have Brave browser as well. I use Brave browser.
Okay.
I use Brave browser for half of my activities. So BAT, you get rewarded for every site you visit, and you allow the viewership of some advertisements, you get rewarded with basic attention token. So basic attention token, good coin, been always a good coin actually. Started in 2017, the middle of the bull run. You can see it's already far from its all-time high.
Yeah.
Its all-time high was 78 cents back in the previous all-time high, rather, back in 2018. Now we peaked at $1.41. So yeah, heavy cap. I think ES can do maybe ×2 or ×3. BAT, sorry, in this run. It's already heavily capitalized. Currently 1 billion. If we make some announcement in terms of partnership or any other thing, you can see the price go up. But it's already a billion dollar market. So just to keep in perspective, as opposed to Matic, just mentioned today, or FLM, I think it might be helpful to go through them actually. So this is Matic, called Polygon Matic. You can see market cap is now 4 billion because once they did that merger, they grained, and I mean you can see what's happened here. So the price is sitting just above 1 cent for a long time, and then it started climbing in January, and now it's 80 cents. So I think once it hits $1, it's just probably going to hit the resist. I mean, hit the support at $1 and stay there. So that's Polygon. Polygon is a good buy because they're actively building, and they have very strong marketing right now. Short term, I think it's a good buy. Personal opinion. Then we're left with Chainlink. You see, Chainlink is a coin I will not be in a hurry to sell, just like I say about Kusama. The reason is that Chainlink is the premier Oracle application for blockchain. I'm not going to go into explanation of what oracles do, but the simple explanation is Oracle provides the blockchain with outside information. I told you that the blockchain is a closed loop, technically. Oracles provide real-life data into the blockchain. That has a myriad of use. And Chainlink is it's probably the leading Oracle provider for blockchains. They have tons of partnership. I think Chainlink, not that I think, Chainlink is going to do 100. The original projection was 1,000. Maybe it might not reach 1,000 this year, but I think it will go into some couples of 100 or significantly above 100. It's already 38, so 100 is like 3x.
Right.
And because of the partnership, and you saw that stuff about the UNICEF partnership that they're doing. They have very strong partnership. They have partnership with UNICEF. They have partnership with World Economic Forum. They have partnership with, I think, World Bank. They have very strong partnership, and their foundation is very strong. So I think we can very easily see 100 billion market cap for Chainlink because they're still building, very actively building. They have a number of competitors, but I'm going to hold Chainlink for a long time. I might sell off for some profit at the peak of the market, but it's a long term, for me, it's a long term holding in terms of crypto.
Thank you very much.
You're welcome. So thank you very much, everyone. David has a question. Oh yeah, David said win, sorry. Win. So win is already pumped. Win what's the name of that token again? Wink or something. Wink. So the actual name is Wink, if I remember. So I do get information about coins, but I don't talk about Wink. I don't talk about coins if I've not validated them. So when is in a good buy range now, when something goes parabolic and pulls down, you can see it's starting to go sideways. It's a good coin to buy because it has what we call pumpamental. They're in partnership within the Strong network. And then because I remember they did something about 4 weeks ago that made the price go crazy. And that's why you see that spike. I can't remember how it was. I think I actually sold off some of my Wink tokens then. It's a good coin to buy. They're still in early days. It just started in 2019. Frankly speaking, all altcoins, even what they call shitcoins mean coins that are not doing anything, will pump during an alt season. The reason they pump is just there's money to go around, so all of them will pump. And because of that pump, any altcoin is going to perform, but they're going to get shown up. They're going to get shown out immediately. The altcoin season goes out. So all altcoins, including somebody asked about BAN protocol. I can't be talking. I mean, there are about 10,000 coins. I can't be talking about all of them right now. All altcoins will pump in the next 4 weeks. The ones I've given you are the ones I'm quite sure about, that definitely you are going to get returns on them, especially if you've been on the WhatsApp group since the beginning of February. Definitely you get returns on them. The other ones, 50-50, but all altcoins will pump. They will pump not primarily because of their own value, but because of the overall value of the market. So if every coin is going up, because of the valuation of the currency markets, all coins will go up with them. And you saw that when the Bitcoin price collapsed by 20%, many altcoins lost 30%, 40%, 50%. That's what happens generally. So now that Bitcoin is recovering, you see altcoins are also recovering. When we get into full-blown altcoin season, then you see altcoins starting to pump. All of them will do fairly well, but there are some that will outshine each other, definitely, and those ones are the ones we're mentioning. Mr. Ewa, you wanted to say something? Sorry. I see your hand up.
Yes. Thank you. So I just wanted to chip in something about Win. Remember, I was trying to remember the point I wanted to discuss with you yesterday. It was actually Win, and they are trying to, or let me say, they just put, I think, Win on gaming. It's now integrated to something gaming by this Justin Sun guy putting something on gaming, which is going to drive the price of Win crazy in about few weeks. Time, and I learned they are planning something on Bonnie as well of Win. So I think he wants to really use, because Win happens to be his latest baby. After TRX, BTT came, then Win. So it is Win that is trying to integrate into NFTs and then gaming kind of arrangement. So that's what is going to drive. I bought Win also that time before it pumped. I took out, I think, about 5 or 7 BNBs, from Win. But again, when I got the news, I had to buy back. I had to buy Win back in its million. So I just put it there, and then let's see how the ride, goes. And since I bought it, even despite the fact that the market, shook and all of that, it did not drop that much. It didn't drop that much. It was holding, just going sideways and all that. So Win is the coin for us to look at it. Don't be surprised that Win just turned out to be another Doge coin in the coming weeks, and then just give people unbelievable money you know, so I think Win is something we can. Yeah, it looks like a shit coin, you know, but then with what Justin is not doing, I think Win is going to be the one to repeat what TRS did in 2017.
Wow,
In that particular year.
that's
So the
interesting.
thing we need to pursue. Yeah.
Thank you very much, Mr. Iwai. That's fantastic information. So you can go and buy Win. I remember I can't remember why I bought it back then, but I remember I bought it, then I sold her. But
Sorry,
then I was wondering why it was.
Winglink.
Sorry?
Winglink. This one.
Sorry?
I'm sorry, I didn't hear this one.
I think it's this one. The Win that we're talking about is the Win. Yes, it's this one. Win. Wait to when you know this one, I want to pay.
Exactly.
Okay. Now, okay. Okay, so this one is Tron. Let me open this in a new window. We'll find out the real one now. So yeah,
Okay.
when you have tokens that perform, they're usually duplicates. But this one is a fake. This one is a fake. Yeah, this one is a fake. So how do you know the fake? Just to explain, you can see that this information that I'm talking about here is also repeated there in the other. Let me move this. In the other Win, this information is also repeated here. But
okay,
two things to know: this is a fake. Win belongs to Justin Sun, is the owner of the Tron blockchain, and Win is sitting on the Tron network, which this sign is a Tron sign. So I know that this is a Tron smart contract. So the token is sitting on the Tron blockchain. However, this particular one is sitting on Ethereum. So it can't be. So you can see it, Ethereum.
okay.
This one you can see it's Tron. So it can't be. This is the right one, the Wink link. Just in case you're in doubt, if you come to CoinMarketCap, this is the right one because it has the Tron in front of it.
Okay.
You usually have, you see, market data on tracks. This one is a scam one. Ask people to come and buy on DeFi, then we swindle them of their money. So yeah, Lukman says free signal. Yeah. So when is a good buy? It's relatively very cheap and it's on Binance. You're on Binance Global. You're good to buy. Adi, you have a question. I see your hand up as well.
Thank you. Good evening. Hi. My question, please, is Dr. Demi. I am new to Binance, using Binance, and I am aware that you run a training on how to use Binance, how to understand, because to tell you the truth, I have always been using crypto.com, and coming into Binance, I'm finding it difficult realizing how to trade on Binance. And it's very confusing when the coins are on BNB or on ETH or BTC or something like that. And knowing what to sell into, how to, I think my main issue is the amount of money that is being lost with all this buying one coin to use it to buy another coin again. And I know it's not something you can talk about here because I believe you run a training specifically for maybe trading on maybe exchanges like Binance and stuff like that. Do you have one that is about to run as soon as possible or something like that?
Can you PM me your number? I'll send you the courses we have. Just PM me your number on the chat. I'll send you the courses we have available after this.
Okay.
Definitely we have trading fundamentals covering the trading on Binance. That makes it very easy.
Okay. And number two questions, sorry, and you may have said something about this, but I hear you people talking about, when you're looking at a coin, the market cap and stuff like that. How does this market cap relate to coins, as in with regards to you knowing how to use it to figure out a coin that has reached its potential or hasn't? Okay.
Those two, so one of those two trainings I'm going to send to you also answers this question. It's called tokenomics. It's just like analysis of a company's stock price and what's driving it.
Okay.
Yeah.
All right. I will send you a message.
Yeah.
on my number and then, okay. All right. Thank you.
You're welcome. David, do you have a question? David.
Oh, hi. Yeah, how you doing? You're right.
Yeah.
Oh, sorry. I don't have. I've hacked on
Okay.
the chat actually.
Okay, no problem.
Yeah, sorry about that. I didn't know I actually unmute myself.
Oh, okay. So thank you very much, everyone. There are no other questions. It's been a lengthy one. We'll see you again next week. Till then, enjoy your weekend. If you see your portfolio growing, just smile. It's just beginning. Have a nice weekend, everyone. And take care.
Thank you, Doctor.
Bye.